Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today we are focusing on gold.
Well, yes, Vivek, the uncertainty from the US markets, which is bothering other asset classes, clearly is proving to be a boon for the gold buyers there, because we are trading at an all-time highs in sense of gold for the Indian markets. We've broken above 81,000 rupees per 10 grams as well. For the international markets, we are still $30 away from its all-time highs, but the prices have been pivoting around that level for sure. So when you look at this year until now, we've gained up by 6% for the gold prices. This is after gaining 28% in the previous year as well. So there have been various supportive factors, whether it's about the interest rate trajectory. Bank of Canada also already has cut interest rates. ECB could be doing that today. The US Fed, of course, hasn't given a guidance, but the strength in US dollar index seems to be weighing slightly onto the markets here. The other part is the tariffs and the uncertainty, and that continues to support gold prices there. Well, for the Indian markets, though, there's a bit of a problem here. One, because you're looking at the gold prices on a discount of $30 to $35 an ounce. That is one, because a lot of bullion dealers and importers are trying to sell gold ahead of the budget. The expectation is, or there is a concern, that you could be looking at a reviewing of the import duty on gold, which was cut in the previous budget. So ahead of that, they want to clear a bit of their inventories. The second point is that you are looking at weaker demand because of these high volatile prices from the retail consumers as well. That has led to this discount coming in for the Indian markets there. It also has to do with the global space, where you are looking at Chinese buying slightly on the weaker side. The central bank, the Indian central bank, that is, after buying all the 11 months in the month of, in the year 2024, did not buy in the month of December. That's yet another thing that the street is watching for. But it is lower volumes as well ahead of 1st of Feb, especially ahead of our budget, and of course on what the US president does in sense of tariffs. So a bit of a volatility, but clearly gold seems to be taking all of that in sense of gains.
Thank you very much for that. Get into a break. On the other side, we'll focus on the infrastructure stocks. And what are the infrastructure companies expecting from this year's budget? Full tilt on that.